Good morning, everyone. Today's what, Friday, I guess, the 25th of November 2016. Got a follow-up question here from same viewer from the last time. Which are all valid questions. So I decided to make a video, and like I said, I'm lazy. I hate typing. Um, so follow-up question. So my question around your method is more along the lines of your strategies. Do you have more than one? So let's start there. So the question is, do I have more than one strategy? And the answer is yes, that's correct. Um, the reason is that so with crude, uh, I've been trading it for quite some time now. I think I started trading it the same time I started my channel, which I think sometime last year in September maybe. So about a year now. Um, um, the thing with crude is that it's a beast. So you have to you know figure out where it's going. But I guess any other instrument, you have to do that just to figure out how it's behaving. So um, I do have a strategy for trading the uh, the trending days, and then you have the sideways days, and then so on and so forth, right? So and actually this past few days is probably a good example. So like for instance, on Monday, as you can see, this the whole day is just trended up. So and then and the day after that it's like sideways and then sold off. And then Wednesday, which is pretty much predictable, I was actually waiting. I made a video, but it was all screwed up, so I didn't post it. But this whole day is just pretty much just flatline. It was just sideways. And then Thursday, Friday, so now it's kind of sort of a trending day, but I can guarantee you today might be as another sideways action. It'll just make it already made its move, and then the whole day is just going to be sideways chop. How do I know that? The reason is, well, obvious, or it might not come obvious, but it's obvious to me now. It wasn't obvious to me then, but I used to chase this all the time and realizing, it's a holiday week. Most big money is already not even probably paying attention or not participating in the market. So, so a lot of this is going to be just novice type trading. Somebody, market makers are just looking to fill someone so they can make their commission for today, right? So I learned my lesson. I actually still kind of taking the time off. I want to participate when big money's participating, and you can see that on the print. You can see aggressive buyers, aggressive sellers by just watching the dome, and that's just come with screen time. The more time you spent looking at these things, I mean, essentially it just clicks. So the recipe is that how to last long, right? So a lot of it is just a matter of discipline, and basically try to figure out how to lose less money. Especially if you're brand new. Um, I mean, I still fall into traps sometimes. We're not perfect. We're creatures of habit, and so the important part is try to learn how to make good profitable habit rather than trying to erase bad habit and then learn new habits. So um so so that's kind of where the category I fell into is that early in my career, I'm probably as the same as everybody else, looking for the secret sauce to trading, and I didn't fall trap to all the educators out there, but I did buy a couple of DVDs just so I can learn the basic things. But there's certainly a lot of people on YouTube selling their videos, and you can actually, I think I'd like to recommend this website. It's called Trading Schools. So this guy seems to be very honest. He does thorough work, and I'm pretty sure. you've probably seen, if I scroll up and down this thing, you could probably see some of these people are actually on YouTube, you know, um, recommending their channels, right? And a lot of them, you know, according to this gentleman here, he, you know, he goes in there and tries to audit their performance, and turns out, you know, none of these guys even trade. I mean, even at sim, I mean, sim, it's even acceptable, you know, because everybody can learn. You know, if you take sim seriously, you can certainly learn from it. So none of these guys even trade, so they just want to take your money. Anyway, so that's kind of my premise to starting this video. I figured if we could all share through experience, you know, then you can speed up your learning curve. So something I've done already, you know, I can certainly share, you know, the traps that I run into. And hopefully, if you could learn from that, then you don't run into it, or you could avoid it at all. So that way, cost savings to you. I guess this is what I'm trying to do, is pass you the cost savings. And so, anyways, so I do have more than one. You know, just the very first thing that I do is try to figure out the trend. Where is it going today? So if you can figure that out, if you can master how the things are going to behave in a certain day, then you're probably, you know, better off. So figure out, you know, where the trend is going. You know, do I counter trade, you know, meaning fading the market? I absolutely do. You know, you can certainly make money buying, or either on a long side or on a short side. You know, it doesn't matter. It doesn't matter how you see the market. No one can dictate to you how you see the market. This is what causes the buying and selling, is because one person thinks is a long, the other person thinks is a short. So it's just a matter of identifying which is the right side, right? So that's probably easier said than done, and that's what, you know, spending some time on the screen would help you do, is that for you to identify where the areas, you know, might reverse, or where it's going price wise. So I do have strategies for both, and I think some of my videos, you know, you hear me say scalping. You know, I'm just scalping all day today. You know, like some days like this where it's sideways, and you can see the range. It's like 47.39 low, and then what is that? 48.42. So just a little over a buck, I guess. Um, so, you know, days like this, especially, you know, day before a holiday, then yeah, you can expect sideways action. So, and I speculated that ahead of time just because I have seen it before. So experience taught me that you know, it'll be appropriate to, you know, short and fade this move right here. And actually, when I traded, uh, let's see, where's that day? I lost it. When I traded, I believe I faded this move right here, and I was trying to ride it to the short side, and I was able to get myself out of a losing position, because initially I thought I was long, and I was like, well, okay, it didn't work out, so I was quick to get out, and then I just started shorting it, and I think I was trying to target these two, but didn't quite make it, just because, you know, I guess I didn't expect that it was just gonna hang around in the middle somewhere, and what I was really expecting is, you know, sideways action to where it'll make a high, or it'll break this. You know, imagine when I was here, you know, this was the high right here at 48.34, and suddenly broke above that. So, you know, and then it couldn't close above it. So that's the reason why I started shorting. So I mean, this is actually a pretty good move. I mean, 48.43 to 47.87. You know, so a good chunk of change there. Um, so that's that. I mean, you could, yeah. So I have days to where I feel like I need to scalp, um, and then there was methods to where, you know, I could certainly, you know, try to ride the wave and see if I can, how low or how high I could go, right? So it's just a matter of your risk reward. you put on a risk, you try to figure out, what can I get out of it. And they're I think if you've seen me use, or if you haven't watched all my videos, I modified this Fibonacci extension to just in terms of percentage. And so let's just say I'm risking you know this much from 44 to, let's say, 25, right? So the question is can I get to 300%, which is that this level right here if I'm going long. So basically I'm risking 1 unit to make 3 unit, or to get up to the 3 unit, which gives me at least a 2-to-1 risk reward ratio. So once you get this priced in, the rest is just putting in the trade and just allowing it to to happen. Because I mean, if you're wrong, it's obvious. You'll get you get taken out, you get stopped out, and if you're right, you'll take the reward that you're seeking. So at this case, it went beyond that if you're going long, right? So yeah, I mean, you don't make it complicated. As long as the reward is there, then take the risk. I'll do it. I mean, I do it all the time. I mean, I get taken out more than I could count. And but when I see a setup, something I recognize, that then I take the trade all the time. I mean, even if I lose, I'll take it, just because I know there's a good chance, a probability that this pattern would emerge, and it would always do it. And you'll probably hear this more all the time, is that you're just really looking for a pattern that you'll recognize, and then you just wash, rinse, and repeat. You keep doing it over and over. Even if you lose, you take it, just because of the fact that you've seen that pattern, and it'll guarantee you to go to a certain direction, right? And in your mind you're thinking, well, what is the pattern? Nobody can dictate that to you. That's something you would develop over time, or at least that's what I've developed over time. I've been here long enough to where I could actually see things going to emerge. So basically I see a pattern and I know, okay, well, this kind of this type of price formation would lead to certain direction, and therefore I'll enter. And then when I see these things, at least you have to be quick to prepare, and 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 figure out your risk reward ratio. At least that's what I do. So that's why you'll see me use this tool once in a while, but I use it a lot. That's just the way for me to gauge and measure whether I can get the reward for the risk that I'm taking. And a lot of times, if you go back and watch my spreadsheet, I think 1.7 risk reward is kind of the sweet spot, to where if you can get 1.7, then you'll be more likely more profitable, and it will take care of your losers as well. But now I prefer, at least if I can get 3-to-1, 2-to-1, then I'll take the trade. So in this case, if you're I'm just gonna highlight it. It might not be. So let's just say I'm looking to go long because I think it's going to reverse. So I'll take this risk right here, which is this gray area that you're seeing. And so if I measure that, can I get 300? Because this thing measures 0, 100, 200, 300, 400, etc., right? So if I can get at least to 300, would I able to take this trade? And the answer is, if I don't know if you've heard the saying of look left, trade right. So from what it looks like, it's possible that it'll test these highs. And by the way, it always tests the highs. So these highs right here will get tested, and you can see it consolidated there, never went lower. So there's a chance of going up, right? So if I take this trade, and let's just say I'm aggressive buyer, I start risking this portion, then there's a good chance that it'll go up. But as you can see, the wicks went even as low as this one, and it never touched the gray area. So that even tells me even further that there is aggressive buyers there, or people who are short and just looking to get out just because they see that the trend has changed. And if you decipher this whole price action here, this is the last high it made, and suddenly it broke out of that. So the pullback is where you see buyers, right? And if you're big money, you realize you're wrong, then this is probably the place that people would get out, because they always know that there's always a price reversion, and they'll try to revisit that same price. So this is where also short covering would take place. If short covering takes place to take a minimal loss, then short covering will cause a rise in price, right? Because everybody's trying to get out of their short, so you'll have imbalance right here to where um, you know now your long is all loaded up, and to balance itself up, the price has to go higher, and then you'll see the buyer would unload their longs, and this is where the short side happens. So hopefully that makes sense. Um, so do I have more than one way to make money? Yes, absolutely. You know, a part of my screen time is I study and study and study the charts and try to understand, what caused something to go long, what something causes to go short, or whatever direction it is. And I think you've seen it on my videos. I even calculate statistical measure on a 10-minute chart, or how many times a second bar would form, what's the probability of a second bar forming, and how much is that bar in 10-minute wise. So in a daily, you can do that, and in a daily chart as well. You can certainly calculate these things, and part of my, like I said, one thing is to see patterns. The second thing is you have to learn how to back it up. I'm and I'm still, like I said, I think I'll be a forever student of a market. um, I see something new all the time. That's any I think just that's just constant in life. I mean, the only thing that constant in life is change. So something is always going to change. If the market is the same all the time, then everyone's going to be a winner. So the market has to figure out how to trick you somehow to take your money. So your job as a retail trader is that you need to figure out that change. So when it changes, is there where you're more likely find your niche, if that makes any sense. So anyhow, so enough of that. So basically, my morning routine, starts off as I think I mentioned it in some of my video. I start reading a book in the morning. The first thing I do, um, some people call it meditation. I'm my background. I have a strong religious background, and I'm certainly not here to shove religion in your mouth, but that's just me, my personal background. So part of it is prayers for me, and I read, like I said, I'm reading the Bible right now, just for personal growth and learning. um, so I'm studying that at the moment. And that itself, I could tell when something is not, if I'm not fit to trade, meaning, if I read something a page or two and I'm not comprehending what I'm reading, subconsciously you're more likely not, or at least for me, I'm not more likely fit to trade, just because if I can't comprehend what I'm reading, then price action is like reading a book. You're trying to figure out what's happening, and you're trying to map this in your head. And if you can't do that, then in my opinion, or statistically, from what I could measure, I'm just not fit to trade that day. And as a result, I don't even trade, to be honest with you. I mean, I have a little piece of paper that I write down going, I'm short at this price. I'm just writing it on paper. I'm literally paper trading, going, I'm short this price. And more than if you'll see it more often, that if you're wrong paper trading, you just save yourself some money. So as far as method and process of trading, those are one of the things that I do as a kind of a, if you look at it in business terms, it's cost savings. Your operational cost savings is is just what saved you right there. And as you can see, remember I highlighted this area. Look where it revisited to. So let's just activate this one. I'm going to extend it over here. So as you can see, it touched that level, came back. So that's a level of basically that's a level of that's demand right here. So you could see, came back, and from here it rallied all the way up here, right? So if somebody's watching this, they'll take a risk. And so now we can actually measure this one, price level. I'm still on that extension. Let's see. So you can see, I mean, you can get way more than that. So people would take it, right? It makes sense if you take this risk. So at least you know how much money you're going to lose. So most people think like, oh, I enter at this price and I'm just going to be right below that. I mean, trading is a range, so this is the range at which you think you're going to be right. And if you're wrong, it'll just pass and cut through that, and just the price will just, if you're long this market, then it'll just come right down and won't even look back. It just keeps trading down. So this is the acceptable risk that you understood before you got in to trading. So that's the mindset, that's the mentality you should always have, because it took me a while. When I used to scalp all the time, I'd just get in here. If it goes few ticks lower, then I'll just get out, and it generated a lot of losers. So it's just a matter of, and how do you cure that problem? It's just a matter of adjusting your stops. You just have a bigger range. And with the crude, it's crazy. It's there'll be times that it'll just stop you out, and just to go in a different direction or the same direction as you're expecting, kind of like this price action right here. I'm pretty sure somebody's short this market, and you could see it'll stop you out, it'll break out, and it'll just come right back, and then sell off a little bit more. And had you waited, you can see the price action as we're sitting here today. It's sitting at a much lower range, right? So you're just trading in the range. Think of it that way. So now, it was trading range right here today, and then, I mean, yes, or a few days ago it was here, now it's back here. And then, so now the question is, well, it came back to this level. Would that, would that be a place to buy again? If there's a level of demand there, it'll bounce. So here, there's, as you can see, it bounced a little bit, but didn't go as far as, these guys, these highs right here. Oops. Oh man. I gotta go back to my triangle drawing here. So let's see. Let's go back to the triangle. So this highlighted box, it revisited that area. It actually went lower than that, or lower than that box. It made a low. So do you expect that this thing would come up? And how come it's not, my drawing tool is not drawing? Sorry about that. But anyways, so you get the point. So this one didn't. So this area is no longer a good area of supply, meaning it has come down to that price many times already. So people are not going to be so trustful, I guess, for the lack of a better description, to take that trade. So there's your last minute kind of trader thinking that I could still make money off of this. If you're a scalper, certainly you can make money, right? So yeah, some people would take it, but personally for me, once two two times, three times is probably the most I'll do. But if I see something that's getting tested many times, that's probably not a place to trade. And volume profile wise, I can almost guarantee you, if you plot the volume profile, you probably have a lot of volume right here, and then these are probably like, one or two stems there. And like I said, I'm slowly incorporating volume profile in my trading, but certainly I will not trade in this area just because of the fact that I know there's a lot of transaction that already happened there. So, price got retested and all of that. So certainly I wouldn't be looking here to trade. So, and this is on a lower time frame. So part of my process, if we go back to my process, part of it is, first of all, are you physically and mentally prepared to 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 trade on any given day? So if the answer is yes, then the next level for me is um, starting to put down all my areas of interest as far as price is concerned, and that's why you see a lot of you know lines for support and resistance. So let's just remove all drawings so it'll be a little clearer. So you see a lot of support and resistance lines for me, and that's just for me to kind of learn to identify where I would like to participate. And um, and and a lot of it is, if you watch some of my videos, you'll see me go from looking at the daily, and then from the daily I go from the hourly, and then I break it down all the way to a minuscule 1 minute chart. So basically what I'm trying to do there is that trying to identify where it's going to head, and or where the price is going, anticipate where the price is going, and then either take the long or the short. So if today, if you would have been short today, then try to figure out where you think the price is going, and if there's a lot of room in there for you to trade, then take the short side. And I know this is hindsight, but that's how I would plan for today. I would just figure out where the price is going. So, and then either trade short, or wait here, be patient, and take the long side. So that would be that. Supply and demand. Oh yeah, okay. So supply and demand thing, price action. It all boils down to screen chart, or screen time. I spend enough time for me to actually recognize prices, where they're heading, how they would behave. A lot of this, like I said, it's my perception of the market, if that makes any sense. So basically, I've been here, I've sat here long enough. I figured out most of the traps. So a lot of times, this is where journaling really, 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 really helps, because a lot of times I'd write down, hey, this is what caused me to win today, or hey, this is what caused me to lose today. And now um, I have this computer that I built. It's enough room for me to just make a video. It's easier for me to make a video and go, discuss my trading day, doing a recap, day trading recap of what I did today. Whether it's good or bad, that's what I do. I just pretty much kind of talk about it. And in the beginning, it sounded kind of silly, but the convenience of um, of having a capturing on video, it's much better. And believe me, I do watch it. I mean, I do have a full-time job. I watch it at work, so that way I can kind of drill in my head of the things that it, because if you watch your trades, you go, oh, I remember this trade. And like I said, that's what screen time will provide for you, is you'll remember these things. And believe me, I'm probably the living example of that. I uh, I remember most of my trades, especially the ones that hurt you the most. So being having a losing day, it's not really a bad thing. It's an opportunity to learn, as far as you know trying not to make that same mistake again, because I believe me, you'll make the same mistake over and over and over until you realize, like for instance, for me, I'm a stubborn person, so it took quite some time for me to realize what I was doing wrong. And now my part of my job is removing the old habit and then incorporate good habits. So if you're fresh from trading, it's can I would like to make a suggestion of trying to develop good habits. And just, one simple thing you can do is first of all, like I said, you got to be physically and mentally, your mental state, that you can actually see prices. If you're not sure, sim trade. If you're even scared of doing that, just try writing it down, or just try to watch it, see where you think it's going. So in that right there, I think, had I known that, or somebody had told me that, then it would have saved me so much money. So I'm just trying to help those who's starting out. Just watch the market. Just, sit here and watch. I know that's probably the most boring thing, and it will cause you to try to press that or click that button to buy or sell. There's certainly time for learning how to use your software, and that, this is what simulation is good for. Learning how to set up your chart, set up everything on your software. That's the best thing. So let's see, where was I heading with that? Oh yeah, so discipline. So try to get, try to develop good discipline, good habit. And I believe me, all the price action, the supply and demand stuff would all come in. Part of my process is, your first thing that you should do, or at least I recommend, is, what's the trend today? Where is it going? If you can answer that question, then you just won half of your battle, because the rest is trying to figure out where to enter and where to get out, right? And nothing can dictate that. Just, it's just a matter of, you know just screen time, I guess. Yeah. So that's, I mean, for me, that's what it is. It was just screen time. And and don't fall to, trying to find the magic indicator. There is no such thing. If you fall, that is a bad habit to develop, because you'll spend the rest of your trading career looking for this secret sauce which does not exist. So don't fall for that. Believe me, I fell for it. And you'll see me now. A lot of the indicators, or a lot of these lines that you see, is is something I cooked up, I developed, so it'll help me make a decision much much faster. um, and that's why they're there. So I don't have any more moving averages. I used to have moving average. I have MACD. I have, uh, what is that called? What is that? Damn, there's so much already available for you. A lot of these vendors, would provide all kinds of tools for you, because, I mean, sometimes I'm convinced they want you to lose money, because they want you to trade, 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 so they can get their commission. So now the smarter you get, the more picky you'll get. And have some rules, around your trading. If you're new, I recommend maybe no more than two trades per day. And that discipline right here, the what I'm telling you right now, is if you do no more than two trades per day, it will teach you how to become picky, to to try to find the greatest, your grade A grade prime setup. So when you develop the setup, you're going, okay, well, I'm going to look for the setup. If it's there, I'll take it. So, and all it takes is just one winner, and that's it, right? And it builds your confidence. It builds your confidence to look at price action. It gives you confirmation. So the paper trading, or even just watching the market, if you do that, you'll guarantee. I can't guarantee anything in life, but it will give you all this confirmation that your thesis is correct. So if you're saying, so like right now, for instance, I'm going to claim that there will be selling right here, right? Let's just say that. And if it gets there, and sure enough, it pulls back, I don't know, 10, 20 cents, 20 ticks, you go, okay, then I was right. So now all you have to do is look for the same thing. Wash, rinse, and repeat. You just do the same thing over and over. So now, how are you going to put on the trade is the question, right? What is your risk? So that's for you to determine. Nobody else would tell you that, but you know, like I said, uh, yeah, that's something you have to kind of just resolve on your own. You know, your trading skill and my trading skill is going to be different. So it is best that you figure out what works for you, and that's kind of the trap of education, you know, because they'll tell you, oh, just go in here, get out when it goes through there, but you know, the secret sauce is, you know, they haven't figured out your personality. So your personality rolls into your trading. And for me, you know, right now, would I take this trade even though it might be a loser? I will take it any day because I know for a fact I can back it up with mathematics and you know, statistics that tells me that if I take this, that I could, there's a good chance of winning. You know, so in trading, nothing is guaranteed. The only thing guaranteed, I think, is your higher chances of losing is great. It's not even 50-50. It's like your 80 or 90% chance of losing, maybe 95. So the figure, you know, the what you're trying to do now is really to lessen that loss. So how can I put the favor, or you know, the chances of winning into my favor rather than the opposite side? And that's, like I said, screen time would dictate that. Uh, so let's see. Are your rules for entry and exit defined by which strategy you're employing? You know, my rules essentially, from this spreadsheet here, you know, you always have to just look for risk reward ratio. You just have to know, hey, you know, like for me, 20 ticks is the most I'm willing to lose on any given trade. If I can get less than that, it's even better. So, you know, like I said, um, it's a matter of units, right? So let's see, extension. So we're back here again. Um, so if I'm willing to risk this for a long, this from 0 to 100, then the question is, can I get up to 300, right? So this tool really just tells me, and you can probably make a spreadsheet with this, you know. So if the price is coming down, if you can picture the price is coming down, so if I tell myself, if I'm going to risk this region right here, is there a chance that the price would go up to, you know, right here, right? And if the answer is yes, then you take the trade. If the answer is no, then that would be, you know, then there's no trade. You just let it, you just allow it to happen. Even though if you see right now it's happening, you just you just allow it to happen, you know. If you miss out, you know, then there's, you know, there's always opportunity. This thing is running 23 hours a day. There's always opportunity. So don't feel like you're missing something out. I think that's probably the biggest trap for everybody who's brand new, you know, especially when it runs up like this. You go, oh my goodness, I just missed this trade here. I mean, once in a while now, I still have that. That's one of those things that I just kind of forget about, because one cardinal sin that you could, or one bad habit you can do to put into your trading behavior is chasing prices. So once in a while, you know, there'll be a call to where, okay, I chased it a little bit, you know, I try not to chase it so much, but you know, like I said, you're not perfect, nobody's perfect, and you make this mistake once in a while. So so the thing is just don't make it as often as you should, or you shouldn't make it at all if you can avoid it. But like I said, you know, um, putting in good behavior is probably, or good habit is probably a plus. Which strategy you're employing? Let's see, your rules and entry and exit defined by which strategy you are employing. So my rules and exit is really risk reward. If the risk reward is there, you know, one simple rule, right? You got to make it simple. So if the reward is there, take the risk all the time. This just for me, you know. So in this instance, I'm the guy that's buying the falling knife. So and some people wait for a breakup for more confirmation. I typically don't do that. You know, there are times that, you know, when there's aggressive buyers and sellers, then yeah, it's probably easy to do a breakout trade. but most of the time I'm trying to get my risk. So if this is my risk from 0 to 100, I'm trying to reduce my risk as small as possible. Meaning, you know, if your risk is 20 ticks, then I'm trying to reduce my risk to 10 ticks if I can. So that way, I have another opportunity to trade if I'm wrong on this trade, right? Because 40 ticks is all I'm willing to lose. So at this point, you already know it. I'm watching my tape here. I'm looking for aggressive buyers and sellers, and they do reveal themselves. So you'll see it. The spread would either sometimes would the spread between the ask and bid would kind of widen, and you can see whether the buyers or sellers are stepping in, or you see aggressive people just hitting the bid, or lifting offers. So there's where price action comes in. When you're expecting a bounce on this price, then you watch this level right here. If you need confirmation, then play a breakout and see what happens. Or if if you're trained enough, then you can just start buying at this area, because nobody wants to buy there, right? Some people are like, well, I gotta wait for some people use some MACD, which I think, or you've probably seen a lot of these indicators that I'm talking about. I don't pay attention to that. I'm paying attention to the tape. The tape would dictate who's buying, who's selling, right? Because tape doesn't lie. I mean, it prints what's getting bought or sold. So I'm just the only thing I'm focused on. The rest is just noise. So yes, so that's that. You're trading more on price action. Yep. So I already answered this question. So yes. You're looking for aggressive buyers and sellers at this region. That's what you're doing. So more likely the reference videos. I don't have any reference videos you can watch. I think I've generated almost 200 videos, so it'll be a needle in a haystack for me to just tell you what's good. Maybe I can get better with giving all my stuff titles. Normally, when I put a quick tip, that means it's just someone asks a good, valid question, and or good or bad. If I see somebody could other people can benefit from it, then I make all these videos. So and I apologize, the video is already 42 minutes, so at any time you can always speed it up, right? There's like a let me you could always speed it up. There's a speed, you can put it to 2, and there it goes. It'll go real fast. So, and I can absorb a lot of things real quickly. So let's see, let me pause the video. It's getting long. Let me read through the rest and I'll come back. It seems like I might have answered all your questions already. So anyways, if you have more questions, feel free to stop by. I'm actually on vacation this week, decided to take a break. There's a reason for that. Like I said, big money is probably out in the Hamptons somewhere. They're having a vacation. So and my job as a retail trader is to really follow those guys, because they're the one who sets the high and the low for today, right? So they're the one who has the most contract they can dump on you or dump to the market. So if they're out on vacation, then I'm going to take a vacation as well. And believe me, they probably do more vacations than anybody else in this world. So I'm trying to live their lifestyle. Anyhow, hope that helps. They got about 40, almost 45 minutes of content that I just made. Hopefully it doesn't bore you. But there are good questions here. It's true. So the takeaway for this video, if you make it all the way back here, is that develop a good process for yourself. So that's one thing. So I already kind of sort of mentioned my process really. Maybe that's on another video of what my schedule looks like on any given day. How my day starts basically. But I think I've talked about it in most of my videos. So developing a habit that you can repeat over and over and over and over and over. So that's what I do. I'm just repeating my schedule on a daily basis. So developing good habits, and once you develop that, then it will become a process. The process is what's you already programmed in your head. So um, so my thing is from technical price action wise, chart wise, I always drill down from the daily to the weekly, and then I go all the way down to the 1 minute chart, try to figure out where the best entry would be. And other than that, take the trade. As long as the risk reward is there, take the trade. It's so simple or not really simple, but make your trading rules simple so you could follow it. Um, but anyways, that's pretty much it, and hopefully that helps you out. If you have any other questions, feel free to just drop a line. Somebody's probably watching or have the same question as you do, so you probably just made it easy for others, which is which is helpful for everyone. So, anyways, if you got something out of this, I appreciate the clicking that like button. It certainly would help. You know, Share the ideas, or kind of spread the channel around. And I know what you mean by the BS educators. I mean, you saw the website I just showed you. I mean, there's tons out there, and a lot of them are, you know, living here on YouTube, selling their products. So hopefully you do your due diligence. Until then, I'll see you on the next video. Take care, and have a good weekend. Thanks.